Now, U.S. stocks surged and ended with steep gains as investors cheered a government report that inflation cooled more than expected last month. U.S. markets mounted their biggest rally since April of 2020. Dow went 3.7% higher with a nearly 1,200-point jump. The broader S&P 500 jumped 5.5%, while Nasdaq Composite Index rose 7.4%. Traders are seeing the data as a sign that the worst of inflation may have passed. The number of Americans applying for jobless benefits rose slightly last week, but the labor market remains more or less healthy. This is despite recent job cuts that have begun to spread across sectors like housing and even technology.
The headline CPI, which basically incorporates everything, was up 7.7% on a year-over-year basis. And Wall Street took that very positively because they were anticipating anywhere from a 7.9 to an 8% rise. So getting something better was certainly enlightening and encouraging for investors. I think that the market itself is in the early phase of at least a bear market rally, a seasonal optimism period, and it's probably going to last through the end of the year. But I think that the real question is what happens to further data points. The Fed is not going to take its foot off the brake simply as a result of one monthly data point. It's going to have to see a series of inflationary indicators that point to a lessening of pressure.
Now on Wall Street cues, Tokyo stocks opened higher on Friday. The benchmark Nikkei 225 index has jumped over 1.4% in the early trade, while the broader Topix index rose 1.31%.